Good day and welcome to this ABSA Insights Series. I am Fifi Peters. In today's session, we turn our attention to the agriculture sector. Agriculture, for the most part, has been a shining light for the continent and the investor community. And governments have recognized that agri is a key driver for the African continent's growth and development. But to fully realize the benefits of the agri opportunity, investment in infrastructure is critical. Joining us to unpack this a bit more is Mopai Mashatola, who is the head of agriculture at Absa Business Banking. Mopai, thanks so much for your time. Despite the darkness that we have seen most sectors succumb to because of the pandemic in the past year, the agricultural sector has been the one bright spot in the economy, managing to grow even as the rest of us plunged into a recession. So my question to you would be, to what degree has this enticed capital to want to plow more into the sector for opportunity?
Yeah, thanks, Fifi. The agricultural sector is very resilient, primarily on the continent. A lot of the investors or entrepreneurs that assess agricultural sector really look to do it more on the long term. So basically over 10 years or more. And them being able to fulfill such investment, then they will realize the real returns, sustainable returns over time. And Africa has definitely offered a lot of entrepreneurs the ability to invest in something sustainable. By that I mean there are ample resources on the continent. Of course, some countries have got better rainfall. So, I mean, your key elements in agriculture is primarily three things. So rainfall, temperature, and the last one is the medium, the soil. And if you move a bit north of South Africa, certain countries have generally good conditions for that to happen. So a lot of the entrepreneurs have been looking to Africa to realize the ability to be able to grow commodities, different commodities, some that are linked to food security and some that are considered niche market commodities or high value commodities like your avos, your lychees, your cherries and all that. So from that angle, Fifi, I would say that's what I believe investors look for to be able to invest onto the continent.
But Mopai, how has that activity pressed forward in the past year, and particularly as we have witnessed the prices of everything that most of us consume on our breakfast and our dinner tables go up? To what degree have you seen a change in the level of investor activity, perhaps from abroad, wanting to look into the continent a lot more as a result of the promise of the potential return from this commodities upturn?
Yeah, since agriculture is more a sector that you don't go in, it's not a short-term sector. So it's only for those specific, I would say, farms or estates that already exist that have got an opportunity to be able to switch crops or to switch commodities. I'll give an example. If a farmer has irrigation and has ability to be able to plant maize, or to plant or to keep his fields more open to feed, to graze the cattle. So if the commodity price in the maize space suddenly shoot up, these farmers then will be able to plant more. I mean, I think on the continent we have got reliable information or reliable information platforms that will be able to indicate more or less the amount of maize that is available on the continent or that is likely to be planted the following year. So farmers then have the opportunity to be able to switch, more so those that are already having estates or land. But if you are to consider the ones that have to consider that are still coming in, you will generally need to set up, and that will take a bit of time. It won't be something that you'll be able to get in and do, especially if you're doing it as a greenfield. If it is more a brownfield, then you're going to be able to lease land and then be able to start operating, and you've got a little bit of capital or the ability to be able to borrow. Definitely then you have the opportunity to be able to get involved and then be able to realize the booming prices that would have come across due to the pandemic or due to the recent events in the market.
The level of diversification that you're speaking of is quite interesting because a lot of financiers who look to deploy capital across various sectors in the economy often cite the lack of bankable projects as the reason for staying on the fence. And I just would like to understand your experience on the continent in the bankability of the projects that perhaps you are presented with to potentially finance. What is that looking like?
Yeah, it differs from country to country. So if you get into the space of, say, Zambia, which is traditionally a bit more stronger in the agri sector, your type of bankable projects will be a bit larger, in the sense that the agricultural value chain in that country as a totality or as a whole is much stronger. Then, of course, you have to drill deeper into each crop value chain. So that in itself, in a country like that, your number of bankable projects, because also of the strength of the value chain, because of the players along the value chain, becomes much easier. But if you move into the space of a country, give or take, I'll use Uganda again this time as an example. There's a lot of investment that is also required to be able to undertake certain crop activities or livestock activities in that space, infrastructure that relates to cooling, infrastructure that relates to storage, that becomes important. You may find that the number of bankable transactions or projects will decrease in a country like that. So it all differs, and the ability to be able to assess in each market what each crop value chain then offers will then determine our ability as a bank to be able to evaluate and then be able to offer appropriate products for the space.
Talking about infrastructure, because you mentioned at the start of this series, Mopai, that the continent has some great resources going for it in terms of agriculture and maximizing that potential. We've got abundant of land. We're endowed with some of the most amazing natural resources. But the issue does come with infrastructure, and that infrastructure sometimes weighing heavily on the cost of production and the cost of moving some of these goods in and out of the continent. So I'd just like to unpack the issue of infrastructure and addressing those bottlenecks and understanding what role you as a bank may or may not be playing in investing in some of the critical infrastructure that will ease the cost of production and ultimately make it a bit more affordable for you and I to enjoy our regular meals.
Yeah, I think to a large extent, infrastructure is probably one of the largest bottlenecks that I think the agricultural sector on the continent does have. If you are to consider that it costs less to be able to ship sugar from Brazil to the port in Durban than to move sugar from Tanzania to an inland country so to move it to South Africa, you will then realize how much infrastructure has an impact on the sector. We even within a specific country, give or take Mozambique, there is surplus of maize in the north of the country, but they can't move that maize to the south, to the areas like Maputo. Then those areas then has to import maize from South Africa. So you can literally see that from that perspective, whether you would have to look at road infrastructure, or you'd have to look at bringing in train cargoes to be able to move that. That has a huge impact, and in fact, it has an impact on the cost of production to a large extent. Then you also look at countries like Kenya, countries like Uganda, the ability to be able to have logistics infrastructure for your cooling, your cold rooms, has an impact on the ability to be able to continue doing crops like avocados, because you need to cool them before you can get them onto the ships. But if you don't have that as a collective, and certain infrastructure, the difficulty is that you can't finance it individually as a company. It will have to be generally what we call shared infrastructure, where you'd have different companies that will share in that particular facility. It could be a retailer also sharing with a trader, or sharing with a company that is importing medicine or vaccines into a country. And that infrastructure is key, because it also has an element of public nature in itself, especially the shared infrastructure. Often the banks, the commercial banks like ourselves, will need to partner with other entities, whether those are DFIs or whether that is government, where we possibly can do that. That is the only way that I think we are able to have an impact in that space. Normal infrastructure, road infrastructure, from a banking perspective, or an agricultural perspective, it's generally something that we don't cover. I think those two are key. Now, on the ground, in terms of farmers, you then have to have your adoption of technology. This will be talking to seeds, whether you've got disease-free seeds, you've got drought-resistant varieties, you've got high-yielding varieties. That is important, because if your yield in totality as a country is higher, then you tend to have comparative advantage over time in terms of producing that specific crop.
Well, we certainly do hope that that does happen, Mopai, and that it does happen with the speed needed to help the agricultural sector realize its potential, grow Africa's economies, and of course create a whole lot of jobs for young people who are in need of them. That was Mopai Mashatola, who is the head of agriculture at Absa Business Banking, and that brings us to the end of this episode. Thank you so much for watching, and until we meet again, goodbye.